You have most Asian markets which are in the red.
The multilateral system anchored in the United Nations is a broken system.
The lower end of the channel is at about 18,200. It's not very far from where we are.
The strong numbers from Eicher Motors ahead of street expectations.
I'm looking at 12 to 13% kind of growth in the asset numbers for the coming year.
Eicher, by the way, is off to a flying start, 5% up. So that's the big mover on the way up.
Our main focus of the management would be on the diversification and optimization of the top line.
Very robust growth, as we say, probably the only shining economy in the world.
Flat, but quite a good recovery from the day's low. The day's low today was below 18,200.
NCLT has asked exchanges NSE and BSE to reconsider their earlier approvals to this merger.
A lot depends in terms of how the the rural demand also figures out.
Poll has thrown up a number of 4.79. 6 points higher on the Nifty right now. The mid-cap side of things, they are actually underperforming the benchmarks.
That was the day so far. Hello and welcome to Closing Bell, live from the CNBC-TV18 Motilal Oswal studio. I'm Reema Tendulkar. With me is Nigel D'Souza, and Surbhi will also be here. The big story that's currently unfolding in the market is the pickup that we're seeing in the banking names. Pull up the Nifty Banking Index. That's powering through. The Nifty Banking Index is up 350 points. It's a gain of 0.8%. And now the Nifty is just less than 1% away from its all-time high levels. In terms of numerics, we're about 300 points away from our all-time high levels. And banks are outperforming across the board. So this week itself, we've seen the Nifty Banking Index rally 2.7%, while the frontline indices have seen a rally of about 1.5%. If you pull up the individual charts of private sector banks, you would see ICICI Bank, an HDFC Bank, a State Bank of India, ICICI Bank, across that board. And that intraday chart of the Nifty Bank will also come up for you on your screen. Very, very smart, solid outperformance, and that's where the momentum is. When it comes to the benchmark index, the Nifty is holding above 18,300. It's a marginal gain of 0.1-0.2%. But again, from the day's low, the Nifty Bank as well the Nifty has seen a recovery of more than 100 points, close to about 120 points. In terms of the big gainers, many of the auto names. So auto's doing well today. Auto's done well this entire week. It's rallied close to about 4%. And on the losing side, metals are on the back foot given the decline that we've seen in base metals in China. And L&T continues with its losses from yesterday. Nigel, last day of the week, what's the futures and options market looking like?
Well, before we get to that, just take a look at Polycab's numbers. His numbers are looking very, very strong. On the top line, it was bang in line, and the operating profit we were waiting by because the net profit was much better. But the EBITDA number has come for our viewers on the screen. In fact, that's much better than what we were working with actually in terms of a poll. So the margins, remember the last quarter, they moved from around that early teens to around 14% odd margins, and they've maintained that yet again. So quarter four as well, the margins have been maintained at those levels, and that explains why the stock is up and about. In fact, in comparison to our poll, it's 150 basis points beat. So those numbers look very, very good. So that's about Polycab. We'll get you further analysis, but for the time being, it's an operational beat as of now. And the margins for the second quarter running are holding around that 14% with the street likes. Keep in mind that input costs are cooling off as well. So we'll have to find out from the management whether or not this is sustainable going ahead. So that's one stock. In terms of the futures and options space, well, there is aggressive writing that we are seeing actually on both sides. Because as Reema mentioned, the Nifty is at the high point of the day. We were up close to 25-30 points or thereabouts. But the 18,200 put, 18,250 put, both of them big open risk build up out there. Just take a look at the 18,200, 18,250 as well. More than 80 lakh shares getting added between those two. But when the markets are up, yet you're seeing that the 18,300 call, well, it doesn't appear that there is any much buying out there because that's actually in the money, and the premium out there, well, it's down. So that's telling you that there is some writing out there. So as of now, the positioning is such that 18,420 doesn't get passed. Over the weekend, we have the Karnataka Assembly elections that will be announced. So we'll wait for that outcome. But for the time being, the bears still believe they are going to hold on to this 18,420 to around 18,450. And Surbhi, the call we made, right, a couple of days ago at the start of trade, take some money home, take it easy, have a good weekend. That was when the markets were at around 18,320, and we opened up at around 18,360 odd. So I think that worked out perfectly. Now you take a fresh card on Monday.
Well, it's been quite impressive, absolutely, Nigel.
manner in which the bulls have managed to fight back today. They've put up a good solid show. Global markets have helped to an extent because if you look at Asia, the picture was a little muddled in the morning. But Europe right now is much, much better. European markets up anywhere between 0.5% to 1%. So you've got that one tailwind. And perhaps the market sort of going home with the belief that whatever happens in Karnataka, the outcome is not really going to change much or move the needle much with respect to what happens in 2024 at the centre. So I don't think anyone's expecting any sort of a very, very big surprise on that. So therefore, we're seeing some adjustment. By the way, I mean, the levels that we're tracking right now, of course, yesterday, intraday, we were much higher. And then the market had corrected from those high levels, closer to 18,400. But this level right now, 18,315, 316 at a closing level, this is the highest we've gotten so far this week. So let's see if we can get a consistent close above the 18,300 zone. Just want to point out one or two other earnings reactions. So Polycab, of course, is a good one. Stocks climbing about 4%. Greaves Cotton came out just about, I think, an hour back or so. And there the stock's really getting hammered for 5.5% to the lower side on Greaves Cotton. Some margin disappointment there. Hindustan Aeronautics is the other one that came out. So we'll keep tracking some of these earnings as well as we go along. But before we get to that, let's tell you what's lined up on the show. And it's a packed 60 minutes as always from the auto space. Of course, Eicher Motors, TVS Motors as well as Bajaj Auto. All of those stocks in focus on the back of earnings. We have a comprehensive comparison coming up on how they have performed in the fourth quarter. Intellect Design is surging in trade on the back of its Q4 show. So what works so well for this company? All the details in just a bit.
And we'll also discuss markets and top portfolio bets with Amit Gupta of ICICI Securities. All this and much more in the next 60 minutes. For now, let's get in a few closing strategies. How should you position yourself for the last hour of the trade, for the day, for the week? Mitesh Thakkar is here with us for a few closing strategies. Mitesh, thoughts on the Nifty banking index? What a big up move that we are seeing. It's practically breaking out. It's taken out the resistance levels that it was facing earlier. Any thoughts on the index there? And what are the strategies that you would, look to unwind before the weekend and take ahead of the weekend?
Good afternoon. So I think the Nifty bank, after a few days of underperformance and seeing some correction, appears to have come out of a consolidation and could now, possibly be eyeing the all-time highs. Now, the weekly closing, which happens today, the highest ever weekly closing for the Nifty bank was 43,633, and we are, above that by about 200 points. But the highest daily closing, if you look at the charts historically, which was on the 14th of December, was 44,050. So I had identified this 500 points, 400 point band as the entire supply pivot, but I think, the structure has turned positive with the few days of consolidation and the overbought conditions of hourly charts coming out. Good chance that if we see the Nifty bank getting past 44,050, then 45,000, 45,500 should be the next target area. So stay positive over there. If not the Nifty bank index, you can identify which stocks are giving breakouts, and I have IndusInd Bank as a recommendation right now. It's been showing a good uptrend for the last few days. Now it's showing continuation. So buy here with the stop at 11.95. Look for targets of 12.45 to about 12.50 on the upside. And M&M is the other stock has come out of correction, managed to get past the 200 average today. So buy here with the stop just below the levels of 12.57 and a target of around 1300 can be.
Okay, all right, got that, Mitesh. Thanks for the calls. We'll come back to you in half an hour and get some more ideas going. But as promised, let's look at the auto majors. And Eicher Motors, what a story it has been today, right? From the beginning of trade, 5 to 6% higher. So we thought we'll bring Sonia in to understand not just why Eicher is performing so well, but it's actually been a great story. Sonia, remember yesterday we were discussing, I was asking you whether Eicher will help these guys pull off a hat trick, and it did. So what's happened in Q4?
So, we decided to do a comparison between its peer set, and it seems like Eicher has outperformed most of its peers on all parameters, whether it's revenue growth, volume growth, or even on the margin front. The stock is now just 8% away from a 52-week high. It is one of the biggest Nifty gainers today. And if you look at the performance, right, I mean, I'll tell you the reasons why, but if you look at the performance, it's been very strong in Q4 and compared to its peer set, very strong as well. So first on the revenue front, Eicher Motors saw 19% year-on-year growth. TVS Motor was in line about 19%, but Eicher Motors is much higher than peers Hero and Bajaj Auto, which are between 7 and about 11% on the revenue front. If you look at the volume front, very stark outperformance that Eicher Motors Royal Enfield has seen. Royal Enfield volumes went up 18% in Q4 compared to TVS, which was just a 1.5% growth. Hero Motor was just a 7% growth, while Bajaj was actually a fall of 13%. Let's look at the EBITDA growth then. Eicher Motors up 23%, TVS and Hero up 22%, while Bajaj was up just about 9%. Now on the EBITDA front, of course, for everyone, it's working out that raw material costs are lower, price hikes were undertaken. So that comparison may not be fair, but on the revenue and volume front, there's a big outperformance there. So what are the reasons for such a strong outperformance that Eicher is seeing? One is, of course, the most affordable bike that Eicher came out with, which is the Hunter 350cc. That did very well. Not just that, the Super Meteor, which was launched in January of this year, is also gaining very good traction even in key international markets. So that's working for them. The Super Meteor has already dispatched over 4,000 units and its order book remains quite healthy. And the other thing is that the street is betting big on the electric vehicle plans. If you remember, Royal Enfield invested $50 million for 11% stake in a Spanish EV manufacturer called Stark Futures. So they're going big on their plans there. And there's also some valuation headroom left. So Eicher Motors is currently trading at about 23 times forward earnings compared to a historical average of about 27 times. Back to you.
Okay, all right. Thanks a lot for that, Sonia. Well, Prakash Diwan as well joins us on the show. Prakash, the Royal Enfield thumps along. It's made a comeback in style. I recall when they had those issues at their Chennai facility, right, on the production front. That's come back. These new launches have worked, and these results look very, very strong. But at this price, what would you do?
Good afternoon, Nigel. So, I don't need to tell you how the Bullet is such a endearing product across generations, across classes, and what it's done is it's made a comeback because all this fear that people had from the likes of Bajaj and all were introducing higher CC bikes would start intensifying competition. It's not actually resulted into much of anything that the Royal Enfield Bullet would have to work for. Now, the other launches, the price points that they have tried filling, and I mentioned this about 6-8 months back that when they launched the Hunter very aggressively, with the Himalaya. With the Himalayan this thing, Royal Enfield Bullet, and then you have the Hunter. You actually straddle all price points and all performance areas, which is what was missing earlier. So they've plugged that gap. They've utilized the capacity well. They've streamlined a lot of that. But at 24 times FY 24, 25, I think you would still get some sort of a pullback where on a bad day you would be able to get the stock at lower levels. Today there's exuberance because it's a turnaround that's evident now. But I would definitely wait for it at lower levels, closer to 3,100, 3,200, which is probably 10% off from where it is, makes a lot of sense. But it definitely gives you that indication that the metrics are coming back, and Royal Enfield will probably become the titan of the two-wheeler space very soon.
All right, just to add one more point, guys, on the Royal Enfield, when we talk about this EV threat, this is one of the vehicles that actually the bikes which actually don't have an EV threat, right? Because the audience that they're catering to is 350, 500 cc or 650 plus. So for them, the threat actually is not there. Because it's something that, people like me dream of buying when you turn 18, when you turn 20, when you get your first salary. So that's why I think that threat as well is not there because it's in the higher cc category as well.
So that EV disruption issue, that's not an overhang on the
It'll
business.
first hit the 100 cc, 125 cc, 150
entry level.
cc. Yes, entry level. So,
Okay, got that. Well, Prakash, stay on. We have more questions for you. Just wanted to get your take on the big story from yesterday, and that was Dr. Reddy's. And the reason I'm asking is that even today, I mean, with the market having taken off and things are quite okay on the Nifty, look at the added selling. Dr. Reddy's has lost another 1.5%. What was your takeaway from this US business disappointment, and what thoughts on the stock now?
So, good afternoon, Surbhi. So, the numbers very clearly tell you that it's not just about a secular trend where there was pressure in the US, which all of us know, and all companies went through that phase. But the difficult phase has translated into a lot of impairment at Reddy's, which is taking much longer than what the street's patience would probably warrant. The setback has not been able, they've not been able to get over the setback, whether it's delayed launches or whether it's weak launches or it's weak performance of some of the recent launches. So on all counts, I think somewhere, the brand portfolio needs to kind of be taken a relook at from the company's perspective in terms of what is it that they need to focus on, and stepwise kind of, start getting into the market share, superior market share situation, which is far off right now. So I think the street probably is not very convinced that this is going to set itself right very soon, unless there's a dramatic change in the strategy or some sort of new, product launches which do exceedingly well beyond expectation, which doesn't seem very likely, should be. So I think the disappointment would probably be more continuous, and it would probably lead to a little bit of a time correction now that the price correction is already set in.
Prakash, any thoughts on Siemens numbers? Look very strong Q4. Revenue growth 28%, profit jump nearly 39%. And Nuvama is saying that this is the best play on the capex upcycle. And they're assigning it a peak capex valuation of 64 times forward valuation multiple. And they've gone ahead and raised the target price to 4,400 versus 3,800. UBS as well is bullish on Siemens. Target price is at 4,500. But, a valuation multiple of 64 times, forward multiple, that's stupendous. So any thoughts on Siemens and the kind of bullishness that's being ascribed by the street?
So, Rima, the bullishness is understandable. I mean, Siemens and ABB, if you see, have marched ahead in the last 24 months, absolutely in an unstoppable way. Given the fact that they ride right on top of this capex cycle that we've seen, and cap goods has been a very, very clear story cyclically that's kind of turned around and started making waves. But I do agree. This kind of multiple is something which does tend to be on the exuberance, edge of exuberance, because everybody is probably trying to accord a scarcity premium to these companies, particularly Siemens, because you really don't get this kind of a product portfolio that's revving and they're firing on all cylinders. For the first time in their existence in India, they've got things right in each of those business verticals, as the commentary clearly tells you. And this whole thing of, the railways being the big daddy of capex in India, I think the biggest checkbook is from the railways, defense and railways. These are two sectors which really have been contributing to the pump priming of the economy on the PPP side as well. And that's where, Siemens has also kind of started seeing huge traction on the locomotive side, which, the order book tells you a story which is very different. But I do agree. I would not be a buyer. And then for what? I mean, 3,800 to a 4,400, the kind of risk reward is still not in favor of the reward as much. But yes, it's a great story. If people have bought it at lower levels, you could probably hold on given the strength. But buying at these levels, I don't think makes so much of sense given that you're just looking at another 700-800 rupees upside with these multiples being so stretched at 64-65 times.
All right, Prakash, request you to stay on with us. But by the way, from the broader markets, there are plenty of stocks that are moving around. V2 switch gears. I don't know the last time we spoke about that one, but that's popped up in trade, and most of those gains coming in this hour itself. So let's pull up the intraday chart out there. Russell India as well. That's another one that's up close to around 10%. 4% of that move has come actually in the last 10 to around 15 minutes. And Ethos as well. That one as well has suddenly spiked up in trade. So big moves is what we're seeing on some of these names in the broader markets. It appears that party in the broader markets still continues as we speak. Ethos will get Russell India as well as Vito. That should be up for you on the screen. A lot of action is what we're seeing. Slip into a short break. On the other side, our Alpha Manager of the Day, Amit Gupta of ICICI Securities, will be joining in.
We don't just design new cars. We create new ways to design all cars. In fact, we make the whole world of India's mobility new forever.
Film shoot, iPhone 14 Pro पे. Amazing camera, huh?
And cut! Hang on, director को भेजना है.
Beach से, कैसे? Those 4K videos are huge. यहाँ juice तो मिल गया. Wi-Fi कहाँ से मिलेगा?
Airtel 5G Plus तो मिलेगा.
So you've
already got it. Maybe you should get it too. Back up, guys!
What if you could get your goods to the right place at the right time all the time? With IBM Consulting, AI-powered software can help automate your supply chain so products can be ordered, produced, and delivered more efficiently. What will you create? IBM. Let's create.
When our big boss was MD, he used to take care of us.
And our Prince Sahab is busy ensuring his family. Oh, big boss, you?
He's busy obtaining term insurance for his family. After all, office is also our family, am I right?
Let's close the deal.
Thank you.
Verma ji, will you have tea with this prince?
LIC's Group Term Assurance Plan takes care of your office family.
How do you start an iconic movement? Mannerism would say it's all about refinement and richness of invention. Classicism would say it's all about form and craftsmanship. Impressionism might answer, it's all about capturing the magic of every single moment. While Surrealism would find all of this quite, well, surprising. After all, it's about creating the icon of a new movement. Welcome to Forwardism. The new BMW i7 and the new BMW 7.
Welcome back. So we've been talking about a couple of these big capital goods stories which have been doing well in the market, the Siemens numbers. So Prakash, I thought I'll throw in this. I've just been asking you about the losers from yesterday, right? So you gave your take on Reddy's. What about L&T? You know, that was a big debate. And you're right, ABB and Siemens, these stocks have been going through the roof. But the market was very disappointed with this whole margin outlook that L&T has put up. What do you think?
You know, so I'm happy you asked this because in the cap goods sector, if you actually had to look at allocating capital, you can't be doing it with Siemens and ABB at these valuations. But L&T, in spite of whatever the street has understood or has figured out on the margins, I think is a giant of a business that's under a transition where they're seeking to only focus on businesses that are profitable eventually. So, you know, optically, it might look like they've compromised on margin, but this order book that they have now started slicing and cutting out of the huge opportunity that exists is going to be excellent in terms of the next 3-4 quarters. So if you have the patience, I wouldn't be surprised if L&T outperforms some of these larger cap goods players as well. It's a heavy stock to move very nimbly, but when it does, I'm sure, you know, somewhere closer to 2,800 is what you would pencil in for the next 1.5-2 years. So excellent buy at this opportunity. I think the results have given you that window. Grab it.
I think we should do a bull and a bear with Prakash being the bull and Dipan Mehta being the bear. I remember the conversation with him. Dipan was obviously, his disclosure was he has a holding and obviously a little disappointed with the outcome. But speaking of bull and bear, guys, I think we have another one which Ekta is going to do for us.
Yeah, I think Ekta is joining in actually to tell us about Dr. Lal's and she's weighing the bullish as well as the bearish argument. Ekta.
Thanks for that. Well, yes, I'm going to start with the bull case with regards to Dr. Lal. So, for example, the statistics did look better this quarter. Revenue per patient was up around 6% on a year-on-year basis. The non-COVID revenue was up 14% year-on-year. In Feb 2023, the company did take a price hike in niche as well as less frequent tests, something which they haven't been able to do for multiple years. And they have indicated that they didn't see much resistance when it came to the price hike as well. The gross margins expanded 190 basis points points year-on-year due to a change in mix as well as the price increase taken. Specialized testing has scaled up for the company quite significantly. It is going to be a growth area for them. Margins are expected to be around 25% going forward. Volume growth to be in the range of around 8 to 9 odd percent. The industry, according to them, is normalizing at around 10 to 11%. There are some expectations of the ease in deep discounting, which is expected to take place, as well as a reduction in the advertising intensity. Now, the bear case, the Suburban acquisition has not worked out as well as what the street had anticipated. For example, the margins were 12%. The traction in the Suburban margins were lower than estimates. The non-COVID revenue, while it grew 14%, the street was anticipating somewhere even between 20% in terms of a growth. So for some analysts, it has fallen short of expectations. Stabilization of deep discounts is already captured into the valuation at this point in time, as well as the recovery. The valuations are steep, 45 to 50 times 1 year forward. Brokerages such as UBS have a buy rating, target price 2,500 rupees. According to them, there is a normalizing competitive landscape. The geographical expansion is expected to support. Goldman Sachs is neutral with a target price of 1950. On the bearish side, we have Antique, which says that volume growth remains a challenge. They have a sell with a target price of 1187, and Kotak, which believes that the valuations remain elevated, and they retain their sell call with a target price of 1525.
All right, thanks a lot for that, Ekta. Bullish versus bearish view on Dr. Lal's. But, Prakash, I wanted to ask you about Polycab. The stock now is up close to around 4.5% odd. And Surbi, our research analyst, she's sent a little bit more in terms of details on that one. The FMEG business continues to struggle. But otherwise, the core business, which is cables and wires, well, that's doing very, very well. And that's why there's a margin beat. What do you do with the stock at around 3,300?
So, Nigel, I think excellent numbers and kind of this set of earnings actually ends up justifying the steep rise that you saw in the stock and the valuations that you are according to it. But my sense is the cycle that Polycab is riding on in terms of, the kind of construction activity and the kind of housing breakthroughs that you are seeing in terms of real estate portfolios for most cities. There's no reason why superior products that the likes of Polycab manufacture wouldn't do well. In fact, if you see the stark difference between a Phenolix and a Polycab in terms of pricing, in terms of revenue growth, you can make out the Polycab has gone way ahead in terms of positioning themselves very, very superiorly out there in the market, and that would continue because the effort that has been put in terms of the distribution channel, in terms of the product superiority, the range that they have got, the price point that they have filled in, I think it's going to work much more favorably for them. So while it is an expensive stock, but it's like, probably one of the best in the FMEG space. And at some point, the regular electric goods would also start kind of contributing much more, which has been struggling for the likes of Havells, V-Guard. All of them have that issue. But somewhere I think that will turn itself. But definitely, it's a very bullish setup that you see in Polycab from here on as well. The earnings will probably continue to deliver. The company will continue to deliver these kind of earnings for the next 3-4 quarters very clearly, as you can see from these metrics.
Prakash, thank you very much for joining in. Some more stocks. Greaves Cotton has fallen 5%, post its numbers. Big decline seen in margins and profitability. So revenues are up 33%, but margins have contracted to 5.9 versus 6.6%. And that's one of the reasons why the profits are down nearly 60%. That's the vertical decline in Greaves Cotton, post the margin weakness and the 60% drop in the company's profitability. Amit Gupta, Senior Vice President at ICICI Securities PMS, is now with us on the show. Amit, afternoon. Everyone's watching out for the Karnataka election. The verdict will be out on Saturday. I know it perhaps may not have a big bearing over the long term, but in the short term, there are implications from a stock market point of view. How would you weigh the impact and the importance of Karnataka elections on the market?
So, see, historically, we have seen that the state elections, they don't have that kind of bearing on the markets, actually. So, market will be waiting, I think, eventually for the next year for the major elections to come out. And but I think the platform is very much ready after the budget, because you have seen the kind of capital expenditure announced by the government. Financial year 23, they completed 7.5 lakh crores. And for the financial year 24, I think that particular move of spending 10 lakh crores has already started. You are seeing the stocks related to the capex story, whether it is ABB, Siemens or railway stocks. They have already started participating. I think that is where that's a different, a move which is happening now. And the consumer theme, which is, I think, on the lower ground, I think, because whenever the election comes, we believe that some kind of, money moves into the lower the pyramid. So that is what, we are waiting for, because villages still, they are not, firing from all cylinders. We have seen a lot of weak pockets over there. So we have to see how the mass consumer segment starts performing. So that is still awaited. But I think so far it is more a capex theme, or, a few chemical stocks or some auto ancillary kind of players, I think, which are performing definitely good now.
All right. Hi, Amit. Let's talk about the auto ancillaries then. One space that has done very, very well has been tires. You've got beat coming in there from all these tire companies. From that space, you like Apollo Tires, even at these levels?
So I think it is one of the cheapest still. If you look at the whole segment of, tire segment, you compare with MRF, because they are also catering to the CV segment. So when you look at the CV and the passenger vehicle, so this has one of the highest market share. So in CV, they have almost, 28% of market share. And particularly you look at the European business, because 30% of the revenues are coming from European business. And generally nowadays we talk about that there is, we need to avoid those stocks which are linking outside, because there may be a slowdown actually outside. But if you look at this company operates from Hungary, and Hungary has a, the different kind of pact with Russia. And that is why when there was a whole gas problem, when we met with the management recently, we came to know that even when there was a major problem, the gas crisis over there, this company could not find that kind of, problem. It sailed through very nicely. And in fact, it increased its market share in that market by almost 250 bips. I think this is what you need to give credit to this company now. And I think from the free cash flow generation perspective, going forward, we are expecting almost 2,000 crore of cash flows coming here. And on the top of it, when I look at from the macro sector perspective, I think when the crude is under pressure, now it has come down to $72, $73 per barrel, then it is good for the tire stocks, because their margin generally starts getting better because of the, derivatives of crude which are used in the manufacturing of tires.
Amit, do stay on. We're getting the Cipla numbers. So on the top line, it's a good number. It's a 9% revenue growth on a year-on-year basis. But the bottom line has missed our expectations. We were working with a profit figure of about 773 crore, but the company has delivered a number which is closer to 526. But that's on account of a one-time loss. If you add that back, I think the bottom line would be closer to 700 crore rupees, which is just slightly lower than what this CNBC-TV18 poll was. So the big drop that we are seeing in the profitability versus estimates is on account of a one-time loss of 182 crore. If you add that back to the bottom line, then the profit would be closer to 708 crore, which is near the CNBC-TV18 poll of 773 crore. The EBITDA, the margins have come in at 20.5%, an improvement compared to 14.3% that we saw in the comparable quarter of last year, but slightly lower than street anticipating. So a bit of a miss coming through on the profitability and on the margins. We have Cinderella Carvalho of JM Financial now joining in. Afternoon. Initial reaction to Cipla, and what explains this little bit of a margin miss?
Yes, of course. So there is a margin miss for sure. So definitely we were at around 21% plus, and we have delivered around 20.4. So below our estimates, but top line has been ahead of our expectations. So we want to look at the regional breakup to understand this. And overall, I think, as you very well said, that there is an exceptional item of 182. So that's what is largely the PAT miss. We were also around 7 billion number for this Q4 number estimate.
Cinderella, as we speak, the stock actually has moved into the green. So I think the street got stumped actually with that big miss on the bottom line, and then they saw that one-off, and that's why it's recovered a goodish bit. Cinderella, any kind of margin you were working with? The margins that I've reported have come in at around 20.5%, which is an improvement from 14.3% on a year-on-year basis.
But its Q4 is generally a weak quarter. From a Q3 perspective, there is always a blip to the Q4 number. However, from my expectation perspective, we were at 21.4. So, it is a miss from our estimate as well. Yeah, a little off. But the top line has been better. We were at around a 54 billion number. They have delivered ahead of 56. So that's kind of, helped them. But then the PAT is still lower because if the top line has been ahead of our numbers, then definitely the EBITDA margins are working in their slightly lower than our estimates.
Cinderella, can you just give us a sense of, how you were expecting the individual businesses to shape up? And for instance, in India, what were you penciling in? And we'll just wait to get some of those details as well. To get a breakup of what's worked on the top line, which is a number that's definitely enthused you.
So, of course, we were expecting a good number from the U.S. perspective because of generic Revlimid, and that continues throughout the numbers, right? So, U.S. and India, definitely this is a seasonally weak quarter for India business, actually, Q4. However, their IQVIA numbers have been better. So we really wait to see that. And Saga, we were expecting a flattish to negative kind of a growth for this quarter. And the rest of the businesses around about 5-6% growth. So that was the overall number. I think the big expectation is US around $175 million and then followed by India.
Okay. Cinderella, hi. Thanks very much for joining in. Just wanted to comment on the profit bit, but even on an adjusted basis, the profit is just at around 710 odd crores. Is that in line with your expectations?
Yes. So we were at 697 to be specific. So it's slightly ahead with the adjustment. So around about there, in line.
All right. Based on what they've reported, what is the assumption from the US sales this time, considering that they had Revlimid generic contributing, and on the other hand, they did have competition from, say, albuterol?
Yeah, so even we are hoping that albuterol, whatever the Bloomberg data showed us, they have lost some share there. So that's the reason we were expecting a slight weakness on the EBITDA margin, if you ask me. However, this is slightly below our estimates also. So we were at around 21.4, and I see that US might be a slightly weaker number than expectation, and India might have supported the overall top line. Is what I'm understanding the number as of now.
Okay, that's exactly what I just wanted to touch upon, that despite Revlimid generic contributing this quarter, the margins have come in lower than what the street was anticipating. So based on the fact that, Revlimid is going to taper off probably in the next couple of quarters in terms of contribution, what would your margin assumption be, considering that there is lack of clarity when it comes to key drugs such as Advair generic as well as Abrixon generic? So in the best of quarters, in terms of contribution from drugs, they've reported 20% in terms of margins. Going forward, what would it look like?
So we are building around a 22-23% going ahead for the full year perspective. And I think they will deliver that because, see, given and said, generic Revlimid will be there for another 2 to 3 years. And the volume share adjustment have to give benefit to the entire generic play. Right, not just Cipla, but everyone. So that will ensure your margin stability for the business. However, what remains volatile is the quarterly numbers. And if we look at the overall US generic business also, we are hearing the commentary, at least from all the peers who have reported so far, they are giving us a commentary that a single mid to high digit kind of a price erosion is visible. So that will give us some more stability for the overall margins going ahead for all the players playing the U.S. generic market. So that's the thought process. And in terms of overall EBITDA margin, as I told you, we do expect them to deliver a 22-23% EBITDA margin for the coming 2 fiscals.
Okay, all right. Thanks a lot, Ekta, as well as Cinderella, for joining in and giving us those details. So first look at it, it appeared it was a big miss. Adjusted for those one-offs, it appears the numbers are pretty much in line. And as Cinderella says, she's expecting margins to improve a little bit from around this 21% odd mark to around the 22-23% odd range. Nimesh joins us to run us through what he's picking up in terms of D Street chatter. Nimesh, what's happening?
Hi, Nigel. Another quiet day. The volumes are on the lower side. The participation is on the lower side, and we are pretty much trading in that very narrow range. 18,300 is a very strong resistance, and that's playing out for the last many days. Needs to see if that's get taken out, because if that's the case, then you'll see further short covering rally in the Nifty. So that's the overall feedback. I guess the sector which is really dominating and participating in the upside is the Nifty bank. A lot of private banks are again buzzing in trade and in good volumes, backed by FI buying as well. So that's one space where there is buying interest continues from the larger institutions. I guess earnings is a big thing which is dominating the lot of individual stock moves, and that's likely to continue. But net, largely a day of consolidation, but the flows have clearly slowed down, and the participation also is on the lower side.
All right, got that. So that's the overall picture. Individual names, what's on your radar today, Nimesh?
The first stock on my list today is Delta Corp. For the last 2 days, that's one stock which is seeing a lot of volumes picking up. There is a lot of interest as well from the larger HNI community, and looks like there is a bit of buying interest as well. So on back of some HNI flows, that's one stock which is on my radar, and it's buzzing as well in today's trade. The second stock is Indian Hotels. Remember, the stock was on my list yesterday as well. For the second day running, there are sell flows from larger FIs, but I guess there was a block of 52 lakh shares in today's trade in Indian Hotels. It's largely a clean out trade from a larger FI, so it looks like large part of the selling is out of the way in Indian Hotels. The third stock is Aarti Pharma. For the first time, this stock is coming to my list. Looks like it's part of a overall pharma space which is buzzing, and all of a sudden this is one stock which has caught some HNI attention as well. So in the back of good volumes, this is one stock which is buzzing into trade, which is Aarti Pharma. And the last stock is IDFC First Bank. Again, the stock has been consolidating in a narrow range for the last many days. For the first time, there are some signs of profit booking now, and some sell flows as well in IDFC First Bank.
Thank you very much for that. Pharma indeed is buzzing today. Look at Dr. Lal Pathlab, 6.5%. Glenmark Pharma, Supriya Life Science has a double-digit gain. Thank you very much for that, Nimesh. Get into a break. On the other side, we'll get in a few more BTST calls.
We don't just create new standards, we create new priorities for the Indian car buyer. In fact, we make the whole world of India's mobility new forever.
What if you could get your goods to the right place at the right time all the time? With IBM Consulting, AI-powered software can help automate your supply chain so products can be ordered, produced, and delivered more efficiently. What will you create? IBM. Let's create.
I'm slow. I'm a tortoise. But your wealth managers, they shouldn't be as slow, you know?
Choose Nuvama. We move at the right pace because we only do what's right for you and your money. Nuvama. Let's do it right.
Zedblock Premium Agarbatti and Dhoop, official prayer partner, Delhi Capitals.
Dadu,
Yes?
what does premium mean?
Beta, premium you can say is like petrol. The car will keep going till the time it has petrol. Once petrol is over, the car stops.
But Dad, this time even if the petrol is over, our car won't stop.
How come?
With LIC's Jeevan Labh, even after the premium payment tenure is over, the policy's benefits continue.
That means our journey of happiness will continue non-stop.
LIC, हर पल आपके साथ.
Welcome back. Well, we're ambling in that range itself. TCS has moved a little bit lower in the last few minutes. So just keep an eye out on that one. But Cipla, the one that we were discussing a few minutes ago, after being down nearly 3%, that's moved into the green. So keep an eye out on that one. But before we wind down, well, let's get in our technical expert. Mitesh Thakkar is back with us. Mitesh, what's your call? Give us a couple of stock picks.
Yeah, I have a BTST on Page Industries. I think that's one which has moved towards the day's high. The BTST can be taken here with a stop below levels of 41,850 for targets of 43,000. And a STVT or a sell side trade on NNDC, which I would recommend taking a negative trade with a stop at about 107.5 for targets of around 103.5, 104.
Okay. Thank you very much for that. Let's get to our earnings corner and quickly tell you the numbers that you need to track and keep on your radar. Well, Cipla just reported their numbers, but the ones to watch today post-market hours are Tata Motors, Vedanta and Manappuram Finance. The big number to watch on Saturday, tomorrow, will be Avenue Supermart. So let's drill it down to the individual numbers and expectations. Sonia is standing by and she's going to lay down the expectations for Tata Motors this time. Sonia.
Well, thanks a lot for that, Reema. So for Tata Motors, the stock is very close to its 52-week high. It is up 23% from the lows we saw in December, and that's largely because of the strong performance that JLR has delivered and the improvement in the balance sheet. So in this quarter's numbers, we're expecting a good showing. The revenues could come in on a consolidated basis at over 1 lakh crores compared to 78,439 crores same time last year. The EBITDA will go up about 60%. The margins will improve to 13% versus 11.1%, while the profits could be much higher than what they saw same time last year. Now, as I said, the volume growth from JLR has been very strong in this quarter. It's a 24% year-on-year volume growth that JLR has delivered, coming in at 94,649 units. And the realizations have also risen quite a bit for JLR, in excess of 24%. So due to higher volumes and higher realizations, the revenue growth will be pretty strong for the JLR business. Now, for the standalone business, the volume growth was not too much, just about 3.5%, and the realizations will improve because of higher medium and heavy commercial vehicle sales that the company has reported. Even on the passenger vehicle business, a 7% growth is what we're looking at on the top line. But the important bit for Tata Motors really is the improving balance sheet that the company has seen over the last many weeks and months. They have guided for a double-digit EBIT margin by FY26, and they've also guided for a net cash positive balance by FY25. Earlier, they had said that they would do it in FY24, but then they came out with some aggressive EV plans, and hence they're saying they'll be net cash positive by FY25. Currently, remember, JLR has a net debt of £3.8 billion, and a lot of brokerages are quite bullish on the fact that they will be able to meet their, targets both on the EBIT front as well as on the balance sheet. Back to you.
Okay, all right. Thanks very much, Sonia, for that heads up on Tata Motors. We are getting Vedanta numbers as well. First look, that's a dip in profits. More on that in just a bit. Nigel will give us some of the color on it. But before that, let's just complete the picture on Manappuram, because that's another result expectation today. Abhishek is standing by with more details. Abhishek, what are you watching out for?
The cost of funds can weigh on the net interest margin for Manappuram in this quarter as per analyst expectation. So competition can weigh on the loan growth as well. Sequentially, analysts are saying that the AUM growth could be flat, or the AUM book could be flat on a quarter-on-quarter basis. So the yield expansion will continue for the company. However, the cost of funds that we have seen with other NBFCs as well, that can weigh on the net interest income growth or the net interest margin, which could contract on a sequential basis. So OPEX to be elevated, and gold tonnage can decline due to high gold prices that you are seeing. Our polls suggest an NII growth of 9% YOY and a decline of more than 6% quarter on quarter. We are working with a growth on profits at 45.3% YOY and almost flat on a sequential basis. Back to you.
All right, thanks a lot for that, Abhishek. Well, by the way, Vedanta's numbers on a year-on-year basis, they're looking weak. But otherwise, for Vedanta, the numbers are never a big moving point. But these numbers are good, actually. Hindustan Zinc, which contributes bulk of their EBITDA, that's already in the price. So Zinc International, Zinc India, as well as Silver India, that's already in the price. What you're looking at is a segmental breakup. And out there, aluminium, that's a big contributor to the EBITDA number. Now, we were working with a number of around 1,650 crores. The number has come in at around 1,850 crores. So aluminium business has done much better. Point number one. Point number two is oil business. We already had the volumes, remember. So we're looking at the profitability aspect. The oil and gas business as well, they have done quite well. It's a beat of close to around 100 crores even out there. Power as well as International Zinc, both of them smaller contributors, but out there as well, it's a beat. So just to run you through the numbers, the aluminium business has done better. The oil and gas business has done better, which is bulk of their ex-Hindustan Zinc numbers. And that's why, in fact, the numbers go down as a beat. But obviously, for Vedanta, the operational performance is something that's secondary. The commentary from the management on the way ahead, what they're planning on doing at the promoter level is very, very important. So we'll get those details. But for the time being, we'll say that these numbers are better than what the street was working with.
Okay, let's find out what the way forward is. 10 minutes to go before market closes for the week. We've got our expert, Anand Tandon, joining in now. Anand, the current levels, this is the best time to buy which type of stocks? Can you give us some themes, some sectors people should look at if they want to buy right now?
Well, I think the only safe theme right now is to bet on a strong rural recovery. The monsoons are likely to not be such a dampener, and more importantly, I think the government action will be such that money will be into the hands of the rural consumers. Prices are already favorable. So overall, I think that's been one weak sector that most of the companies have reported. I expect to see a reversal coming there. So that's clearly one of the spaces that you want to be. The others are more a question of opportunistic kind of investments. The big themes will remain, easing of pressure in pharma, for example, from the US markets. So you should see some API improvement, companies improving their performance. Banks will continue to do reasonably well for this year, though I believe margins have probably peaked there. But despite that, performance will continue to happen. Engineering, to my mind, is now highly expensive, but the performance will continue to remain reasonably good. So it's a reasonable place to hide. Those are broadly, I think, the themes that one can be looking to play even now.
Okay, all right, got that. Stay on, Anand. We'll have some more questions for you. But for now, quick break with the news that the market is, as we're getting towards the close, it's about 10 points higher, but in the green and above 18,300 on the Nifty. Back in a moment.
We don't just design new cars. We create new ways to design all cars. In fact, we make the whole world of India's mobility new forever.
It's time to break free. Break away from the routine to the greens and get lost in the world within. To steer through, to stop. Start again, go forth, and just let it all go. With JK Tyre's Ranger 80 for the ones who are wild at heart. JK Tire, total control.
I am heat. AC on.
Blue Star on.
Blue Star fast cool inverter AC with voice command. Bye-bye heat. Blue Star.
The fairest sex they call us. But the rules of the game, are they fair? You know we do have our skin in the game because we put everything at stake and believe in having and even eating our cake. Bold, aspirational, loud. Don't give us those labels. We're all unique, all valid and all worthy. Dreamers, doers and ceiling smashers. Standards and boundaries, we draw them. Stereotypes and self-doubt, we banish them. Equal pay for equal value. Let's create our destiny afresh.
HSBC presents CNBC-TV18 Future Female Forward, the Women's Collective.
Presented by HSBC. Knowledge Partner, Deloitte. Industry Partner, FICCI. Associate Partner, Reliance Industries Limited.
Helps beat sensitivity fast. Sensodyne Rapid Relief.
You got it now. Anywhere the wind blows, you're gonna find the right road. You got it now. Anywhere the wind blows.
Welcome back here with us on Closing Bell. Just a final couple of minutes to go. So let's try and squeeze in another question with Anand. Anand, I just wanted to get your take on metal stocks. Obviously, the pressure is very telling today. Hindalco is down, for instance, 4% right now. Global prices are lower. Your thoughts, I mean, is this a sector that you would look at all, or is it something that you would completely avoid given the macro headwinds?
Well, I think the action was all expected in terms of commodities because of China reopening. We've seen that it has reopened and have not done anything. And to some extent, that is what I had been mentioning in my earlier interviews, that, this time around, China will not be focusing on infrastructure. So you shouldn't be looking at, aluminum and steel to be running away because of the fact that China is opening up, and therefore the reopened trade should not be focused on metals. I think that's pretty much that expectation is now out of the market. I think you are beginning to realize that globally the economy will actually be slowing down. So many of these metals are not having any kind of demand upside that can keep prices at a higher level. I would think there is still more downside than upside from here.
All right, Anand, thanks so much for that. Well, we were wishing you a good Friday evening as well as a weekend ahead. Well, we'll have to wind down then on the markets. It was a quiet day of trade. One would have to say it was the quietest day of trade. The Nifty had at least recovered from the lows of the day. At one point of time, it was trading below that 18,250 odd mark. But we end with a gain of close to around 20 points. So that's a good 75 points recovery from the day's low. In the final hour of trade, you had Cipla. Well, that stock was moving around. A closer look at those numbers, I think the street believed that it was more or less in line with what the street was working with. But for the day on the whole, the Royal Enfield was the way to go. Eicher Motors was up close to around 6%. Mahindra & Mahindra as well was up close to around 2%. And IndusInd Bank actually was the star of the week. That was up close to 2% today. And for the week, it was up close to around 3%. HUL, quietly and silently, it's been moving up. So post those numbers, the stock did take a bit of a whack. But now that stock has recovered all those losses, and for the week it was up close to around 5%. The PSU banking index struggled all week. In fact, it was down close to around 4% for the week, while the private sector banks did do well. But SBI, according to me, that's going to be the big trigger of next week. It comes out with its set of numbers, and the commentary will be tracked very closely. In today's session, Hindalco came in for another day of profit taking, was down close to around 3.5% odd. Data coming out of China is a little bit disappointing, and that's why that was under pressure. BPCL as well as Power Grid, they joined the losers list. Throw in there NTPC as well. What else, guys?
Well, actually, today was a little more subdued for the mid-cap market. The mid-cap index has actually underperformed. It's going home with a loss of almost 130 odd points. The breadth is negative. But having said that, you did have some pop. Some of the positive result reactions included something like a South Indian bank, 8.5% up. Then you had Intellect Design Arena, which was up right from the word go, 12%, 13% actually on that stock as we're ending the day. Dr. Lal Path Labs, 7% on the higher side there. So those are your good result reactions. Throw in a Zensar to the mix as well, 9% up on Zensar. But then you have the disappointments. Obviously, there's Greaves Cotton down 6%. Of course, we've been talking about some of these metal stocks. So Hindalco from the index, Nalco from beyond the index. Some pressure over there. Z, by the way, is ending down 3%. A lot of uncertainty on what happens to the merger with more issues coming up at the NCLT. So slightly mixed picture, but remember the bias for the mid-cap, mid-cap at least the index, and the breadth was a little negative today as we ended.
Yes, the mid-cap index is down nearly 0.4%, and there was quite a sharp slide which came in the mid-cap index in the last 30 minutes. So for a greater part of the trading session, the mid-cap index was actually flat, just down about 0.15%, but it suddenly slipped. Some more losers. Manappuram Finance reports numbers later today. That stock was down close to about 5%. Bharat Forge came in for selling pressure. Mahanagar Gas, the numbers were good, but today the stock has sold off a bit. For the week, though, it's still up close to about 7%. Broadly, pharmaceutical had a good session. So we spoke about Supriya Life Science. That had a gain of 10%. Glenmark Pharma was up close to about 6%. And there goes the bell. Well, we've wrapped up this trading week. We've managed to close with some strength on the benchmark indices. Both the benchmark indices, the Nifty, the Sensex, and the Midcap Index, are practically up 1.5% for the week, though Friday was on the quieter side. Pretty flat close for the Nifty and the Sensex, though there was an intraday recovery. Banks did pretty well and now are less than 1% away from their all-time high levels. Post-market hours, watch out for that Supreme Court hearing, which is going to take place in the Adani Hindenburg Research, 5:30 p.m. We've got the India CPI inflation print as well. So we're going to wrap up, and take your leave on this show. Enjoy your weekend, but stay with CNBC TV 18. Smart Money comes up next.